today. TFNN, educating investors.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. Hey, John, what's going on, brother?
Hey, Tom, good afternoon to you. How are you?
I'm doing great, man.
I want to thank you, first of all, before I ask you about the stock, you and Tim Ward and all the gang at TFNN. I had a really, really good year after the October call you guys made. My 401k is up 72%.
Congratulations, man.
A couple of things I made with Coinbase and other stocks that I made, and I've had a good year.
And we appreciate you growling and prowling with us, man. That's a beautiful thing.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Wednesday, December 10th, it is Fed Day, and we got some markets rocking to the upside. S&Ps, we surge higher. Federal Reserve, they cut the overnight lending rate by 25 basis points. That's what the market was expecting. They may pause from here on out. Chairman Powell, he's finishing up his press conference right now. One of the things he was talking about is they're pretty close to the neutral rate, whether they're there exactly. But they were pretty sure they were above that neutral rate. They brought it down another 25 basis points. And let's kick it off with the headline. 3 dissents. 2 of those dissents start maybe no cut. And Mr. Stephen Moran talking about, maybe we should go 50. But nonetheless, they cut to 3.5 to 3.75%. And in 2026, they project just 1 cut. Now, we'll see where we go from there. But as I mentioned, 9-3 vote. They cut by 25 basis points. And the market rejoices. We got the S&Ps at 69.01. NASDAQ 100, we're up by 0.6%, trading up 135 points, 25,837. You see the acceleration right up to the highs of Friday and Monday for the NASDAQ 100. Dow is already in positive territory. We're accelerating higher. Yeah, you got the Dow now, only about 300 points from all-time highs. Check it out. Dow up by 1.2%, 48,200 on the dot. And the Russell, particularly rate sensitive, the Russell up by 1.7%. Yeah, that's an all-time high. There you go, the Russell up by 1.7% or 43 points at 2573. Bitcoin up a few $100s at 93,740. You have Ethereum up by $72. Crude been under pressure lately. That's your daily. Crude right now higher by 65 pennies or 1.1% to 58.90. We jump to yields. All right, let's start it off with a 2-year. How about that move? Okay, you got higher price, lower yields coming at you. They only have one 25 basis point cut, but what that has to do with, folks, okay, is you're going to have a new buyer in the Treasury market. And how about $40 billion a month? The Fed says it's going to begin T-bill purchases 2 days from right now. $40 billion a month starting December 12th as it looks to rebuild reserves in the financial system, which dwindled while it was tightening. Now, they just tightened this last month, I believe. Yeah, earlier this month. The Fed stopped shrinking its holdings earlier this month. Quantitative tightening amid signs that reserves in the banking system were no longer abundant. Well, the reserves were so non-abundant that they're going to begin replenishing them right now. So you got a new buyer, right? The Fed, they're stepping in. They're buying T-bills, $40 billion a month. You got a new buyer. The price is going up. So your 2-year is up by 4 basis points, higher price, lower yield. Your 2-year yield right now, 3.55. Okay, the 2-year. Well, look at the yield curve. We got lower rates coming at you right now. There's your 2-year. Blow it up a little bit. Your 2-year, 3.55, down about 7 basis points. Biggest move on the curve. All right, look at it. Biggest move on the curve, the 2-year. And you better believe it when you got the government stepping in. And part of his verbiage here is that they're going to step in, and they're going to do it. And they're not going to stop anytime soon. Let's see if I can get the exact verbiage. But, yeah. They're going to get a lot of data ahead of the January meeting. Powell emphasizes that the discussion now is about whether to stop cutting here, bring down a little, or more than a little possibly. Okay, there's tension. All right, we jump to the dollar. So, as you have yields lower, yeah, check out this dollar. We just dropped from 99 to 98.62 right now. Dollar's under pressure. You take a look at the daily on this thing. We are breaking away, man. November 25th. Yeah, you were up to 100.2. And we're at 98.66. This is the lowest we've seen in the dollar going back to October prices in the dollar at 98.66. And when you got dollar weakness, metal's catching a bid. There's your gold contract. Look at that. We came into that number at 2 o'clock at about 42.20. We're trading right now at 42.59. Gold up by $24. We jump over to silver. Look at silver up by 1.8%. We're right up near all-time highs on silver. The silver bull alive and well. Up another $1.10 on silver at 61.95. All right, we jump over to the volatility index. Look at this drop off, man. No one's buying insurance premium right now. The VIX drops. Look at this. We just dropped from 17.21. You're down 10% from where this thing was at 2 o'clock. The VIX trading at 15.66. We got lows out here last Friday at 15.28 in the VIX. All right, we check in on some of the other equities. So Oracle. We're going to get Oracle numbers after the bell today. And get ready for a roller coaster, man. You back it up to their last earnings. They shock the world. They drive up to 345, and it's been mostly selling since then, giving back all those gains and then some. We're back at 221. Oracle down by about 0.2%. And the market pricing in about a 10% move on their numbers after the bell tonight. But yeah, pretty remarkable. You get back all those gains. And remember, they blew away estimates, and it had to do with that they were signing a $300 billion deal with OpenAI. Oracle shares right now. Look for them after the bell. We jump around some of the other AI leaders. NVIDIA shares up by 0.4% right now. Apple in the green by 0.8%. We jump over to Google, up by 0.9%. Microsoft under pressure today, down by 2.8%. Check out that acceleration, man. Pre-market, you're driving lower. Microsoft giving back some of the gains. Realistically, though, we're just back to where we were less than a week ago, last Thursday. Take a look at Microsoft on the daily. Yeah, you're going to get some volume today. Got about 45 minutes left to go in trading. Microsoft under pressure doing 21 million. All right, nothing's getting away this market right now. Look at this. We got dollar weakness. You got equities priced in a weak dollar trading higher right now. And we have yields reacting. I talked about the 2-year. The 10-year right now, 4.15. 10-year's down about 4 basis points. Yeah, you got higher price, lower yield. Pretty remarkable. We just got a move. November 25th, the 10-year was at over 4%. We came into that meeting at almost 4.2%. Well, we got higher price, lower yield coming at you. All right. Take a look at that S&P as we come into the break. Oh, yeah, here we go. You know, the VIX, when you get a drop off in the VIX like this, folks, whew, that says it all. No one is buying insurance right now. Nothing getting in front of this market right now. We're coming back to Friday's high. S&P's above 6,900, 6,903, up by 0.8%. Folks, stay tuned. We're coming back with Sean Edwards from Direction. We're going to be talking some markets, talking some ETFs. Always a good segment. We'll be right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits. The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. Welcome back, folks. We got markets in the green, and right now we got yields with a little higher price, lower yield, dollar weakness, markets moving. And right now, to talk about all of it, folks, we're going to jump over to our man, Sean Edwards. Sean is Vice President, Institutional ETF Strategist with Direction. Folks, you can head on over to the front page of TFNN. You'll see those beautiful Direction banners. Give them a click. You can head on over to the Direction homepage, direction.com, and we're going to be talking about some of these ETFs on Fed Day. Sean Edwards, good afternoon.
Hey, Tommy, thanks once again for having me. And yes, Fed Day. Hopefully it's bringing an early Christmas to most traders. So hopefully the trend
we got
continues.
Equities higher, Sean, and we got the cost of debt cheaper. So we'll start with that,
Yes.
right? Why not, man? Listen, you guys got some great ETF products. Talk to me, please, Sean. For investors out there, specifically on Fed Day, man, yields rocking. I mean, how about the Fed? They're going to be buying $40 billion of short-term treasuries every month now. We got some volatility, man. What are we looking at, Sean?
Yes.
Talk to me, please.
No, this is a great environment for a few different areas of the market. I'll start in particular with some of our fixed income products. So traditionally
Nice.
what we see is when the Fed decides to cut rates and yields fall, that bond prices are going to increase, right? So for those traders that, are looking to trade around the Fed's interest rate cut decisions, whether they're dovish or hawkish, you can look at ticker symbol TMF and TMV. Now, TMF and TMV, there are 3X bull and bear ETFs that gives you exposure to the ICE 20-plus year Treasury bond index. So when you think about today, if you were anticipating that the Fed was going to cut rates, then you would have looked at our bull ETF, because the movement of this ETF is going to be based off the bond prices. So that means you would have been bullish bond prices increasing. So just providing that tidbit there. So again, great tools for those traders that are looking to take advantage of some of the volatility that we're seeing in the market just due to the Fed deciding to cut rates. So that's a 20-plus year bond index. And I'll also highlight TMF. We've seen outflows year to date, net outflows year to date within TMF, but it's not because of underperformance in the fund. It's because traders are looking to take advantage of the of the Fed deciding to cut rates. So just adding a little bit of flow information in there for you all, just to give you some insight. We're typically seeing a lot of volatility within that product suite. So again, the 20+ year Treasury bond index. And now moving to the shorter end of the curve, if you are looking to trade the 7 to 10 year Treasury bond index, you can look at ticker symbols TYO and TYD. So similar to TMF and TMV. However, this is just the 7 to 10 year bond index that you're getting exposure to. So I'll start there. Another great tool for your toolbox, or an arrow for your quiver, if you are a trader and you're looking to be mobile and agile and trade the Fed's interest rate decisions.
It's pretty cool, man. We're coming. Even Chairman Powell, he was on the air right before we came on. And, nobody knows the answer here. There's a lot of unknowns. Even the Fed, they talk about, this is a very unusual time. I'm not putting words in the chairman's, but the fact that, there's inflation is around, right? There's some weakness. Yes. Where do we go? There's, variables, unknowns. We got a little volatility in this market, I think, for sure.
Absolutely.
Where do we go from there, Sean? Other avenues? Where talk, please.
So, as we know, we can obviously trade interest rate sensitive securities. So if you're looking to trade just opportunities when the Fed decides to cut rates or an easing policy, you can look at small caps. Small caps have been in sort of a pattern here, right? Very sensitive to the Fed deciding to cut rates. We know with small caps, once the cost of borrowing gets lowered, they typically outperform. And so that allows traders who are looking to take advantage of small caps to look at the market for some trading opportunities. So I wanted to introduce ticker symbol TNA and TZA. So that's the Direction Daily Small Cap Bull and Bear 3X ETF. So that gives you exposure to the Russell 2000 index. So again, some of the companies that are small cap, if you're looking to trade just the volatility around interest rates, as we know, just the sensitivity that these smaller companies have to borrowing costs, you can look at trading TNA and TZA. And similar to TMF, we're seeing that TNA has had net outflows year to date as well. But again, traders that are looking to be contrarian, they're looking to take advantage of some of these macro decisions that are taking place. So again, TNA, TZA, if you're looking to trade small caps and take advantage of the Fed cutting rates.
And man, we got to move in those small caps up. We were just up 2% right there today at all-time highs. And you got, TNA, what do you have, 5.6%, I think, something? Yeah, 5.5% on the TNA, man. Those small caps, they're loving it. Quite a run this year. Yeah, quite a run, to put it lightly.
Yes. And then just lastly, another just trading opportunity around the Fed deciding to cut rates. As we all know, financials, right? Financials, they react to the Fed deciding to cut rates, especially regional banks as well, and then even some of your larger banks. This is how banks are in business. They're very sensitive to the cost of borrowing as well. So I'll introduce first our daily financial Bull and Bear 3X ETF. The ticker symbol there is FAS and FAZ. So that gives you exposure to the Financial Select Sector Index. So these are the large banks. So again, think of names like JP Morgan, Chase, Citi, Bank of America, etc. So if you're looking to trade the big banks and their price sensitivity to interest rate decisions, you will look at FAS and FAZ. And again, these are 3X Bull and Bear leveraged ETFs. And then the last fund is our regional bank Bull 3X ETF. That ticker symbol is DPST. So these are regional banks. So these are even smaller. They're really sensitive to the Fed funds borrowing rate. So again, if you have an investment thesis that these institutions will be in the beginning stages of an upward price trend, you can look at trading our 3X Bull ETFs. And as I always say, these are tactical short-term trading tools. Make sure you monitor these trades daily. The trend is your friend, so make sure as you are establishing a position, you have some exits in place as well, just due to the volatility. And like you mentioned a little bit earlier, Tom, we don't know what the Fed's going to do, so make sure you're nimble if you are looking to trade any of our leveraged and inverse ETFs moving into 2026.
It's great advice, man. They're leveraged, daily investment vehicles, folks. But boy, you look at this market. I love this market right now, Sean. That's myself talking, but we have some volatility, and I think we have nobody really knows, right? Like you say, and sometimes that as a trader, we have unknowns out there, and the market's going to have to interpret it. I mean, you look at DPST, those regional banks, on a day when you got the Russell, like you said. I pulled up a heat map of that Russell, man. Everything is green, and DPST up by 11.9% right now. Well, Sean, I appreciate the time on a busy day as always, man. The education, the work you guys are doing over there at Direction. Folks, click on that Direction banner. Check it out, whether it's single stock, ETFs, leveraged and inverse, some great products out there. Sean, we appreciate it so much. And the next time we're going to talk to you is in 2026, man. So have a great month, a great new year. And we look forward to the education coming down the line in January. And we'll see where we are then, man. Thank you again, Sean. Appreciate the update.
Thanks
as
a lot,
always,
Tommy.
man.
Talk to you then.
Okay. Folks, check it out, direction.com. Yeah, how about those ETFs? Some great products on a day where, boy, we got yields rocking, man. And yeah, you better believe it when you're talking about leveraged. And boy, we got some moves, man. TMF, TMV, the longer term. Okay, you're talking about 20-plus year Treasury Bull and Bear, TMF, TMV. And on the shorter term perspective, TYO and TYD. And yeah, how about the Russell, man? Russell, all-time highs, TNA up 5.4. We're coming back, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We get the markets in positive territory. And yeah, how about it? That Russell up by 1.9%. And I was referencing that heat map to Sean. How about it, man? This is the Russell 2000. A few equities in red, not the financials. Look at those financials, okay, from large to small. Now, this is in the Russell, but nonetheless, not a single financial in the red. How about that? Industrials, very, very few in there as well. Real estate, not that bad. Let's jump around the home builders for a second. Getting a reprieve? All right, a little reprieve in the home builders. There you go. Quite an acceleration lower for the home builders earlier this week as yields were spiking higher. Lennar up by 1.9%. KB Homes, okay, up by 4.3 right now. DR Horton up by 3.7. 10-year up by 12 basis points right now, and you got 10-year yield of 4.14. Oh boy, that is a dollar move, man. Yeah, it's not stopping. This dollar's been weak. Look at this move. Now, remember that when we were on November 25th, okay, here's November 25th right here. That's an hourly. All right, but here's November 25th right here. The 10-year yield was at 4%. Now, normally as you have yields rise, the currency that you need to access those yields strengthens, right? There's going to be demand for U.S. dollars to access the higher yield in a U.S. Treasury 10-year. Well, what happened is we had the 10-year go from 4% right here all the way to 4.2%, and you had yields jump 20 basis points, and during that same period of time, you had the dollar weakening down to 99 and change. So then what happens? What happens now is we now have yields dropping, and now you really get a drop. If the dollar was dropping when yields were going up, right, what's going to happen now? Well, you see it, all right? We got dollar weakness in a big way, and that's helping out metals. Gold up by $26, and we're going to hit it? We just did. I thought so. Silver, new all-time high. There you go. How about it, man? Just hit it in the last 10 minutes. $62.31. Jump around to some silver equities. First Majestic up by 2.9%. We do have that in the gold report, folks. We have Endeavor in there as well, up 2.8%. We do not own Hecla. That thing's been a rocket ship. Hecla up by 2.1% right now. We jump over to some other equities. AEM down by 0.6%. All right. New Gold up by 1.2% right now. Wheaton Precious Metals up by 3.5%. Some of the smallers, Vista right at $2, up by 3.9%. Yeah, this dollar is weak, man. Look at this. Whew. That might be the most important move of the day, man. We got dollar weakness. Let's take a look at FCX for ELO and the down. Look at that thing. Yeah, copper. Copper's on a tear. Okay, check out copper. So that's FCX. Now, FCX has a problem in one of their mines. Okay, and that's one thing to keep track of, Elo. And, you know, this acceleration here in September is at their Grasberg mine. Unfortunately, they had a tragedy there. I think there were members that died. There was another tragedy back there, and it was going to reduce their copper output, I think push it back all the way until 2026. So if you're in FCX, be careful there that you got some problems in a fundamental basis. And that mine, I think it's 3% of the world's copper. Yeah, there was a massive mud rush. Freeport's Grasberg mine in Indonesia. 800,000 tons of wet material flooding the mine. Oh. Full production recovery by 2027. So be careful of that one. Now, you jump over to copper, though. Yeah, copper's looking great, man. Look at this run in copper. Okay, this was tariff volatility in July. All we've done is go straight up since then. You had nice consolidation for October and the middle part of November, and you're breaking out. You're doing it with some nice volume. Because I include a chart of copper in the gold report. Now, FCX has a little bit of issues with their Grasberg mine, but yeah, check out Southern Copper, man. No issues here. Look at this thing. Whew. Power and higher up by 2.4% today. That's a weekly. Jump over to a daily. Take a look at the volume. All right, we're going to need a little bit more volume here. I mean, look at this. When we were breaking these highs, yeah, that was the last earnings ago. And that's the area we're coming into when you're testing that in lighter volume. It's been a heck of a run, some of these equities. Look at these markets, man. Dow's up by 607. Dow's 300 points from all-time highs. Russell's at all-time highs right now. You got the NASDAQ. What are we, within 1,000? No, even less than that. Yeah, 600 points from all-time highs. And the S&P's 40 points from all-time highs. A remarkable strength in this market. Yeah, we take a look back at Oracle. And they're buying Oracle coming in. Look at this. And hey, listen, you know, the cost of capital, the cost of debt, you better believe it. Oracle pushed out $18 billion in debt, right? I believe that was the offering they had earlier this year. $18 billion is their financing, their AI build-out. See that acceleration at 320. All right, we jump back to some of the Fed, okay? A couple comments that struck me here. So the growth estimates that they put in place for this year, they were far above what they previously had. But here's the kicker. One comment in particular in the press conference caught some attention. Okay. Here it is. Okay. Some of next year's upgrade to growth just represents a shift of expansion that would have been recorded this year if not for the shutdown. About 0.2 percentage points they shifted from this year to next. Now, when that hit, it took a little bit out of the rally, but guess what? It's back. And that was at about 245. So if you zoom in on the action, okay, we go back to the S&P. You can see, yeah, a little bit right there. Let's go back even to 1 minute. Yeah, there it was right there. That was those comments around growth. And then, kaboom, we take off and we push the highs with the S&P. It's up almost 60 points. The baseline expectation for next year at the Fed is to see a pickup in growth from today's relatively low level of 1.7. And this is the part. The Fed is now within a broad range of estimates of neutral policy setting and will await economic developments. Sounds like a pause, as they say. But yeah, they're close to the neutral rate. And if they're close to the neutral rate, they're going to be cautious here on out, but they're buying $40 billion worth of treasuries. Higher price, lower yields, and the market rejoices. Russell to the moon. Silver, all-time highs. Russell, all-time highs. We're coming right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. S&P is sitting right above 6,900. We're up by about 0.8%. NASDAQ 100 up by 0.6% right now. Dow up by 1.2%. Let's take a look at the heat map in the Dow. JP Morgan, as I mentioned, financials, right? Some of these equities, the most expensive equities in the Dow. When you're dealing with a price-weighted index, how about Goldman? You got $900 equity up 2.1%. American Express up 3.6%. I mean, Goldman, man. This Goldman's up $18 today alone. Look at this run. Oh, man. If you're wondering what equities perform the best from those April lows, how about Goldman, a double bagger from 439 to 895. My goodness, look at this run. We're breaking above the 1-to-1. So this move from October of 2023, an A to B move brings you up to 600. You pull back to the April lows, and you do that same move again, and we're breaking above there now. Goldman. Let's take a look at the volume. On a weekly basis, what do we got there? Last earnings, you had some selling. All right, you're breaking above on lighter volume here. Now, it's only Wednesday. We'll see what we do this week. Goldman up by 2%. Morgan Stanley, same thing, heck of a run. Double bagger from Morgan Stanley almost, from about $95 to $180. So there's your Dow. We got Caterpillar up by 3.6%, Apple, NVIDIA, and Microsoft. Walmart in the red as well. Walmart, that's almost the rotation, right? Anytime you're having assets, you know, Walmart is safety these days. There's a kind of, when the tech stocks are getting clobbered, there's a rotation into Walmart. Well, you have some of the more riskier assets right now accelerating higher, and Walmart's not a risky asset, so they're trading lower as you die a little rotation. But Walmart's strong, man. Those last earnings getting a little bit lofty above that price level. I'd like to see a little bit more volume. We had all that volume around their last earnings. We've climbed higher on some light volume on a weekly on Walmart. Yeah. We accelerate to a high of 108.15. Hey, that was a good break last week, December 1st. You did 110 million shares. Let's jump around to some retail. Put it back to a daily. Target shares up by 1.3. I love it. Let's check out Costco, Elo. Oof. Yeah, same deal, right? Yeah. Now, Costco's got problems, though. Walmart's got only problems to the upside. But on today, they are joined. Costco off by 1.6%. And yeah, Costco. I mean, a story of expectations. That's the trend is not your friend in this one, folks. Look at this. So Costco on a weekly basis. This is a weekly. Now, not a lot of volume, but you're coming into both of these lows. So you got a low out here from March. Look at this. We're just below this one, 881. Oh, man. Now, you're not going to be able to break this with volume, but you have the April lows of 871, and we're trading at 874. Whew. Be careful of that one. The competition's fierce at these big box retailers, man. The margins, right? Everyone's very price conscious. That's why Walmart's been crushing it. That's why Target's had so many problems. Okay, you back it over to an equity like Kohl's. You take out some of that meme volatility. Now, they crushed it on their last earnings. Seemed to be a turnaround story. They're up by 2% today. But, yeah, you look at Target, you look at Walmart, Costco. Let's look at some of those tech companies. Apple shares up by 0.7. Yeah, quite an uptrend for Apple. You back this up on a 5-year. Let's put it on monthly. This is going back all the way to basically the COVID lows of 2020. Yeah, look at this on a monthly, though. You go a little bigger picture, and I love Apple. Okay, I said their holiday sales. I'm going to actively be trying to add to Apple right now. But not when we're pushing the upper boundary of the channel line. This thing was sitting here. Yeah. And, hindsight, of course, 2020. But you see how many times this thing ebb and flows. And right now we're at the top portion of that ebb. Yeah, Microsoft off by 2.8% today. And I'm not sure what that move. What was that move earlier in the day? If somebody's got it on Microsoft. It happened early, and that's what happened, man. So we got Costco as well. Thank you, Peter. So they got earnings after the bell tomorrow. Yeah, then volume may come in. Great point. I appreciate that. Yeah, you better believe it, man. It's only Wednesday. If we got Thursday volume on top of it, could you imagine you ever break? I mean, this is always, the market always defies it, right? If you said to yourself, could we ever break the April lows with volume? Right? You say, you're out of your mind, man. The April lows, come on, the volatility. But guess what, man? You know what can do it sometimes? Exacerbated selling, a little Fed volatility in the mix, and an earnings event. And there will be a price that this becomes a buy. Strength will step into this. Costco is an amazing company. Same thing, with Walmart. Maybe you're coming back to these nice round number of 800. You're at 873, and they get their numbers tomorrow. And yeah, Oracle. Can't wait for this one after the bell. Oracle up by 1.4% right now. Let's check out the streamers. Warner Brothers. You could say they're having a moment, but they better have a moment because they're about to be bought and never exist again. But it just keeps happening, man. And this is where, folks, okay, and I didn't step in, but even Monday, okay, heck of a buying opportunity here. Heck of a buying opportunity. And it's just, listen, the more you live, the more experience you have. Okay, there's always another trade, like my dad used to say. This equity was trading at $27 on Monday. Netflix's offer was $27.75, right? $27.75. What were they doing trading at $27? Well, then the news, of course, that you're talking about, yeah, $30 is going to be the price for Paramount, and you still yesterday were at 27 and change. And it's like, what's going on? Now, guess what? That's not even the best and final. Okay, this is going higher. You're going to be pushing $31, $32, in my opinion, when this gets done. And yeah, Warner Brothers, they're the big winner. And guess what? The market's saying, Netflix, what are you doing? You're really going to keep competing? It's like an auction, right? And everyone gets emotional. And we all live through this, right? Imagine, how do you put yourself in that scenario where you go, and at some point you got to stop? And they will at some point, but we are approaching $110 billion, okay? $110 billion. Netflix is only a $400 billion company. Not even anymore. What are we at right now? $393. This equity is down 30+% from the highs. You know, they're going to issue a tremendous amount of debt, and yeah, they're the big leader, but boy, 100 billion, 110 billion, 120, different number. When Paramount came to them, Warner Brothers, the equity was trading at $12. I think their first deal was 19 or something, right? Look at, when the market first moved, a couple days it got up to $18. They didn't know that the people would be buying this for $32. Okay? And yeah, Oracle, I am still in there, Dan. I was in there before that acceleration is what happened as well. So we you know, I have a longer term look on that as part of that high tech growth portfolio. But boy, you better believe that's a pullback, and you better believe there's some risks in that equity. One more segment, folks. We're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps up by 48 points right now, just off of the highs. Russell pushing all-time highs, but we get back some of those gains briefly. 25.63, a little bit of selling coming into the closing bell. S&P's up by 47 right now. NASDAQ up by 127. We jump back to that dollar. Yeah, no reprieve there. The dollar weakness off 572 ticks at 98.64. You jump over to the metals. Gold up by $25 right now. You got silver. As we speak, another all-time high, 62.28. Silver. You talk about it, man. And the VIX, yeah, nothing. You know, we talk to Tim Ward every Tuesday and Thursday, and he talks about that SPY VIX ratio. When you look at what that looks like, right, think about what the SPX or SPY as the numerator, the top part of a fraction, okay, and think about a VIX at the bottom part of that fraction. Well, if you're dividing the SPY by the VIX, oh man, it is a dramatic drop-off in this market. When you get a drop from the VIX that drops 2 full points from where we were this morning, from 1750 to almost 1550. Yeah, and what does that say? It says nobody's worried about this market selling off. They're not paying for insurance right now. The Fed's back, okay? Quantitative easing, QE, we're here. Can you believe we're in quantitative easing? Folks, the S&Ps are at 6,900. The Russell's at all-time highs. NASDAQ 100 within about a 600 points. The Fed, we're easing, baby. We're buying $40 billion in short-term notes, and the 2-year says, thank you, sir. We're higher in price, and the dollar says, wait a second, we're going higher price, we're going lower yield, even though they may not cut, and we got weakness, and metals like it, and the markets like it as well. Folks, thanks so much for tuning in, spending your afternoon right here with me on the Tom O'Brien Show. Have a great night. Have a safe night. We'll see you tomorrow morning, 9 o'clock for the morning market kickoff. Have a great one, folks. Thanks so much.